Let's get Somit Sarkar in to tell you what Reliance Industries reported and what the brokerages are saying about those results. Somit, better than expected results to a certain extent. What are the brokerages saying?
Largely all brokerages have maintained their stance on Reliance Industries post the third quarter of financial year 2022 earnings. Now, if we see sequentially, all the verticals of Reliance Industries posted a strong growth. However, the same was on expected lines by the brokerages. Now, the O2C division, if you see, that is the oil to chemical division. In that division, it was the refining segment that outperformed the petrochemical segment. And even going forward, analysts are expecting the refining segment to outperform on the back of a strong refining environment that we have been seeing. When it comes to the retail division, it was a strong and healthy EBITDA bait on the back of a strong network expansion. And going forward, if you see, analysts are expecting the fourth quarter numbers. Now that could be a bit weak because of the COVID related restrictions, but the medium term outlook continues to remain positive by the brokerages when it comes to the retail division. On the Geo division, the numbers were a bit disappointment owing to the subscriber churn that we had seen in the third quarter. Also, the EBITDA bit, according to the brokerages, was on the back of an accounting methodology change that the company had undertaken in the third quarter. Now, going forward, it will be the performance of the Geo phone next and the benefits of tariff hike that the company is expected to realize, and that would be the key triggers for the telecom business. When it comes to gas exploration, the outperformance was on the back of higher gas prices and lower operational costs that the company had seen in the third quarter, says many brokerages. Thus, to sum it up, if you see the Reliance Industries numbers, they were pretty much in line with what the analysts were expecting, and hence various brokerages have maintained their rating and the target price on the stock, and they still await further triggers when it comes to Reliance Industries.
All right, thanks so much for that, Somit. Let's talk about this in a little bit more detail on our BNSN Lens segment. We've got Avinash Gorakshakar joining in, as well as Hemen Kapadia. Thank you so much, gentlemen, for taking the time. Good morning to the both of you. Avinash, Reliance Industries, quite a lot to speak about. Where do you start, right? Not just the earnings that have been reported, but also the outlook for the future. The $76 billion renewable energy play. How do you rate the numbers? First of all, let's zoom in a little bit on that. And would you say that it's still a buy at this juncture?
Good morning, Alex. I think numbers which came out definitely have been slightly better than expectations. In fact, I think the key surprise was basically in the oil to chemical division from the refining business. I think margins took us definitely a significant amount of boost from the refining business, and the retail business also did exceptionally well. Obviously, the telecom business was a little disappointing because despite higher ARPU numbers, what was not liked by the markets was basically the subscriber loss on a quarterly basis. So I think, all said and done, the company has done remarkably better kind of in a very challenging period. And I think clearly, as far as the green energy initiative is concerned, I think it's going to take some time before we see, some sort of concrete earnings numbers coming in from these investments. But net, I would believe that FY23 would be a very strong year in terms of the retail business and in terms of the refinery business. And hopefully, once normalcy comes in, the coronavirus, Omicron, goes away, I would not be surprised that possibly in the next 1 or 2 quarters, I think you could see a stronger ramp up in both the retail as well as the refining business. And telecom business also obviously will, normalize. There have been some accounting changes. But net, if you ask me, this stock definitely is worthwhile to even take a bet at the current odd level. Somebody who has got a 12 to 15-month horizon, we have been telling our clients that possibly a fair value of 2,700 is very much possible. So I would be a buyer on declines. And in this kind of market, Alex, when across the board there is heavy selling, Reliance can offer a good defensive bet, from a medium term angle with a fair value of roughly about 2,700.
There's a clear gravitation towards quality. Hemen, I'm coming to you. On the charts, you have Reliance Industries at 2451 today, trading below its 100 DEMA. How does it look? It's still above its 200-day moving average, though. What are the charts telling you?
A very good morning to you, Alex. Thank you for having me. Couple of things, Alex. There was a support line which saw Reliance move from 2250 to around 2565. That support line has been broken, and if you look at the charts, we're on the verge of giving a downward bar reversal. Rather than getting into semantics, I'd say that short term, the up move could be over, and we seem to have walked into a corrective phase, Alex. Some of the mechanical indicators have also given a crossover sell. Though downside may not be much below 24.10 because we are coming off from almost 25.70, but the momentum has been punctured for the time being, and we could see some price erosion. I wouldn't say it's disconcerting, but yes, time being, uh, we've seen a break of momentum and yeah, some more downside left. But yeah, I also feel that the market is set for a turnaround in a couple of trading sessions, and if that happens, I don't think Reliance is going to lag behind, Alex.
Understood. Okay, that's the view then on Reliance Industries, gentlemen.